is 0 days to expiration options contracts, also known as 0 DTE trading. Is that ruining the stock market? Is it killing the S&P 500 and the NASDAQ on a daily basis? I know the market has been up for the large majority of this year, but you're seeing a lot of intraday price action that's really making a lot of traders scratch their heads, especially when you're seeing epic rallies in the face of incredibly bearish news, from retail sales to CPI to PCE to PPI reports. Every time we get one, you see the market initially sell off in the futures and then rally back the rest of the day. A lot of this has to do with, like I said, the 0 day options expiration trading. And what that means is that people are making major bets and high risk options contracts that says that the stock or that the option will expire in the money by the end of the day. That's very high risk. Most of the time people are going months or even years, if they're trading leaps, out before their options expires. In this case, they're actually buying the options contract the same day that they expire. Extremely high risk, sometimes with only hours to go. So as a result, you're getting these people to buy these very high risk contracts, and then it creates a delta squeeze on the people who are writing the contracts, forcing them, as the delta gets higher on the options contract, to have to buy the underlying asset, creating more buying that causes the market to go even higher. Now, I'm no options expert. I've done it plenty of times in the past, but my main foray is swing trading. But this is something that's definitely affecting swing traders of equities as well. So it's extremely important that we wrap our heads around this and see exactly what it's doing to the overall market. But first, before I get into the charts, make sure to click like and subscribe, and make sure to click the join button down below so that you can get all my stock market videos for the members only each and every day. Now, let's go ahead and get to those charts here. First off, we have the Qs. Usually I start off with SPYs. Let's go ahead and start with the Qs. Double bottom, we've talked about that breakout. It's pulling back, but look at the price action over the last 4 days. We're up 3 out of the last 4 days, but we're essentially unchanged. And you're seeing these doji patterns and massive gaps that's creating a lot of havoc and a lot of fades of those gaps. Whether it's higher or lower, we're filling those gaps. And so we're seeing just this ping pong all over the place. That's one thing. That's a big problem for the market. It's trying to hold the support, but it's really not going anywhere. In fact, the Qs haven't gone anywhere essentially since September. And then if you even go back even further and count out this little epic rally, we're essentially unchanged since May of last year. So the market's not going anywhere, but it is moving around all over the place. And you're getting these intraday reversals, whether we're gapping higher or lower. We will fade the highs or we'll fade the lows. And it essentially makes it to where there's a lot of volatility, but the market's ultimately not going anywhere. Now, these 0 day option traders, if you look at like SPY, for instance, it's creating an ecosystem in its own from a day-to-day basis, able to ignore for more or less the large part, the outside news, the fundamentals that are driving the market, especially in the futures. Once the regular trading hours opens, it completely ignores it for the most part. Again, just like I said, over the last 4 days, you got price hopping all over the place here. Now, just like I said, like when you're buying the calls and they expire the same exact day, it also goes both ways, but we're not seeing as much to the put side. It's starting to pick up a little bit, but when you get those 0 days to expiration traders starting to buy the puts, that's also going to create a lot of selling, and it create a snowball effect that ultimately leads into a major downturn in the stock market if it's not gotten under control here in the very near future. From a technical standpoint, we still have this rising trend line here. SPY's desperately trying to hold on to it. It closed below it on Friday. Now it's back above it today and may be ready to make another bounce higher. It's highly uncertain at this point, but this bouncing all around is really making it very difficult for traders to gauge direction going forward. Now, you also have, going back to the Qs, you have the same thing. We're sitting right on this major support level. It has broken this rising trend line, which SPY has not done, but this one, it has broken the rising trend line off of the January lows, and now we're sitting right here on that key support level. Now, also check out VIX, because what makes VIX so interesting is it doesn't equate the 0 days options traders into the VIX formula, and as a result, things look a lot calmer than they really are, because right here, we spent most of the year under 20. We've just recently gotten above 20, and now we're starting to fall back again despite some really crazy swings on SPY or QQQ as well. Take a look at the Qs and look at the 5-minute chart. Look at all of these massive intraday reversals, like right here, and reversal back down, and then reversal back up and down and up and down. It's just ping-ponging all over the place, driving traders mad in the process, and it's very difficult to gauge direction with any sort of confidence. So the other thing that I want you guys to remember as well is that with the VIX, it does, like I said, it doesn't equate into their formula, and as a result, it's largely going unnoticed on this. But then you've got the 10-year yield continuing to rise here. And so the market has been able to thwart essentially the rise in the 10-year for about the better part of a month here. But at some point, if this continues to rise, the market's not going to be able to handle it. And I think that's where you're going to see a lot of the 0 days to expiration options traders starting to buy those puts instead of the calls, leading to a lot bigger downside in the future. So month of March, it's going to be a very interesting one. Be ready for the unexpected. Don't be surprised if you get a big time downswing in the month of March, largely at the hands of these options traders. If you enjoy this video, I would encourage you to like and subscribe. Click the join button down below so you can get more videos like this each and every day. I provide them about 2 of them each day, so it's a really good value. Let me know down in the comments below. Are you engaged in any of this 0 days to options expiration trading? Are you a part of it? Are you doing the calls? Are you doing the puts? Let me know what your strategy is. Thank you guys, and God bless.